All right, so people are asking me what is the best way to find overnight plays? There's several ways, and I like that question because a lot of you guys have under $25,000 in your account, so you're under the PDT rule, the pattern day trader rule, which limits you to 3 day trades per week. You can also do unlimited overnight trades per week. A lot of you guys don't realize that the PDT rule is very much hated. Everyone's like, I want to trade, I want to trade. No, you stupid newbies, you shouldn't trade that much. You need to study more. I used to hate the PDT rule at first too, because I thought everyone should be free to trade. But what I've learned now in over 10 years of teaching is that newbies need to be protected from themselves. So intraday trading, these stocks move very quickly. So it can be very dangerous. I prefer overnight trading because I can kind of time a stock based on what I think it's going to do the next day. So I might buy a stock like at 3:50 or 3:45 p.m. Eastern, and the goal is to hold it overnight and sell it the next day into a gap up or a morning spike. What would cause a morning spike or a gap up, and how do you find these? So first thing that you have to do is look for the biggest percent gainers. Always look for the biggest percent gainers every single day. You should do it pre-market, you should do it midday, and you should do it before the market close. 3 times a day minimum. That way you're finding the stocks that are moving the most in the market. The stocks that are moving the most in one day, I find, especially if they have the right news or catalyst, they can move the most the next day. So some people are like, Tim, why are you always talking about like the biggest movers from the previous day? I want to worry about the future. The last trading day is linked to the future. Obviously, there's going to be new stocks with new news the next day, but you can't predict news and you shouldn't try to predict news. So what I like to do is kind of latch on to whatever is moving right now and see which news, which charts have legs, which ones can keep going the next day. So look for the big percent gainers. Then second, look at the news. Is the stock up because it got mentioned on CNBC? That's kind of a short-term catalyst. That's not going to have legs the next day because CNBC probably just mentioned it once and then it's done. So it's kind of like a one and done. Or maybe is the stock up 20% because they just announced a new deal with Tesla. And if a penny stock announces a deal with Tesla, and it's up a lot, it could be up the next day as more people recognize the importance of this. A small penny stock partnering with a big company, or maybe it's GE or Bank of America, that can have legs. Maybe if you're shorting a stock, because you could actually make money when stocks go down, maybe you're shorting a pump and dump that just had its first red day. And it has no news whatsoever, but technically the stock is broken, because let's say it was up like 6 or 7 days in a row. The promoters, the Wolf of Wall Street-like characters are promoting it. Then it has one day where volume drops off and the stock is down. That's usually the sign that the promotion is done. So if you're going to short a stock, you want to short it into the close on the first red day. And the goal is to cover into your, ideally, a morning panic the next morning as the momentum continues to seep out and people start to realize that it's nothing more than a pump and dump. Sometimes you get lucky. I've shorted stocks with the goal of covering the next morning into a morning panic, and the SEC has halted the stock overnight because it's a pump and dump. You don't want to be caught long a stock overnight that's a pump and dump because it can get halted. It can crash the next day. So you have to think about what is the risk holding a stock overnight. Which kind of news has legs to push a stock up, and what kind of news has risks of pushing the stock down. Overnight, I think, is a great time period to have a trade, but you have to know the different catalysts, you have to know the different risks, and then ideally be there for the market open or even pre-market the next day. Hey, Tim Sykes, Millionaire Mentor and Trader. Thank you for watching my videos. I hope that they help you. I want to share everything that I've learned over the years. You can check out more videos right over there, and also click subscribe so that you can watch all of these videos, get that knowledge, and become my next millionaire student.